Hello, everybody. Welcome to this webinar that's brought to you by Bursa Malaysia and managed by LifeChamp that is titled Start Your Stock Trading Journey with Trend Following. So today we are going to look into one of the trading strategies in the market that is trend trading. Now, trend following is a strategy that can help us to make a lot of money, like multi-bagger if you get the trend right and we trail the strong trend stocks. Okay, today we're going to look into how we can use this strategy to make big bucks in the market that we can get multi-baggers. All right, so before we begin, as usual, disclaimer. So whatever we share on this webinar is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any stock. So if you decide to make any investment decision, you're 100% responsible for all your investment risks. All right, so allow me to briefly introduce our speaker today. He is none other than Jin Hao. So Jin Hao is a position trader and investor in the capital market. He's a founder and chief master trainer of Street Finance. He has his own signature program, which is Street Trader Intensive Program that teach people how to trade without monitoring and speculating in the market. So he's often featured in medias like City Plus FM, Borneo Post, and Sinchu. He's also featured in Britishpedia, Biography, Encyclopedia, Successful People in Malaysia, the third edition. Wow. So he also spoke for Bursa Malaysia and other investment banks, and is also a frequent speaker in universities and colleges. So without further ado, let me introduce to you Jin Hao. Jin Hao, how are you?
Hi, everyone. Hi, Shane. I'm good.
Yeah, it's been a while since we have you back for a webinar with Bursa Malaysia. So glad to see you again. So without further ado,
last year.
yeah, let me hand over the session. Yeah.
All right, sure. Okay, so I should start sharing my screen, right?
Yes, that's right.
Okay. All right. Hello, everyone. If you can see my screen, my slide, can you please type 1 in the chat box below? Okay, now should be disclaimer. All right. Okay, cool. Okay, so again, just want to stress again the disclaimer. I'll be using certain stocks as a demonstration and illustration, and understand that these are not buy or sell calls. These are just for educational purposes only. All right, for educational purposes only. So, okay, let me just pull out my control. Okay. All right. Okay. So just now Shan has already introduced me, and so I don't have to reintroduce myself again. Okay, so let's move on to the content outline for tonight's webinar. All right, so the first thing is trend versus new. Which one should you follow? All right, trend versus new. Which one should you follow? Later, I'll give you a little bit of explanation and examples on which one you should be following and what are the things that I have been using to guide my trading, at least. Okay, so the second thing is what is trend and why you should trade with the trend, right? So you can start seeing that you know the drill already. Okay, so what is trend and why you should trade with the trend. And third one is how to analyze and follow trending sectors or trending stocks in certain case. And last but not least, we will be looking into how you can structure your trading plan with 4-step T.E.S.T process. Now, before I proceed any further, I just want you guys to rate the current Bursa Malaysia market situation right now. Okay, so on a scale of 1 to 10, 1 being bearish and 10 being bullish, can you type in a chat box and let me know how do you think the market is right now? So neutral is 5, 1 is very bearish, and 10 is very bullish. Can you type in the chat box, how do you think the market is right now? Do you think it's neutral? Okay, do you think it is like bearish but not that bearish, maybe a 3 or a 2, or you think it's bullish? Then you kind of 6, 7, 8, or 9. Okay, I want to see in the chat box below. All right, so I can see that most of you are towards the bearish side, with a few maybe around 5 and some maybe typing 6. Maybe you kind of already see that certain stocks, okay, is kind of like recovering. Okay, when you see the market, because in a specific market, okay, there are definitely stocks that are performing and stocks that are underperforming. So if you happen to, if your watch list is full of stocks that are underperforming the market, you might feel that the market is bad. But I can see that some of you type 6 or even 7 in the chat box. So I kind of, my guess is, if you type the market is 6 or 7 right now, you should be watching, or at least watching, okay, or trading stocks that are actually trending, or at least they are outperforming the current market right now. Okay, so again, we will talk about all these later and how do you look for trending sectors or trending stocks. Okay, so the first one, how would stock price react to news? So this is actually an old news, okay, dated back in April 27, 2021. And the news said that Sapura Energy secures 6 oil and gas contracts worth 1 billion ringgit. Okay, so again, this is actually a good news for a company that is already not performing. So getting contracts is kind of like good news for such companies. Okay. But however, how do you think the stock price reacts? How do you think the stock price reacts? Do you think it's up or down? Type up or down in the chat box below. So I want you guys to participate in this webinar so that you learn better. Okay, you learn better. So do you think that this type of news, usually the stock price, or based on your experience, would the stock price go up or go down? Okay, so most of you said down. I would say I think it's like half right now. Okay, so this was the chart after, okay, the news was released, which is on the 28th of April. You can see right over here, 28th of April. I'm not sure if you can see my cursor. Let me put out my pointer. So again, 28 April 2021. So you can see that right at this point, you can also see at 2021 and somewhere near May, which is April 28. So you can see that the stock price basically did not move because of the news. All right, did not move because of the news. Some might argue that it moved before that. But again, this is just a like small movement, nothing really drastic. So again, if you look at a trend, it has been trending downwards for a long time, meaning that this type of stocks is kind of like weak. It's kind of like weak. Overall market, okay? Overall trend of the stock is weak. Okay. So again, in terms of trend, this stock is definitely in a downtrend. So in a downtrend, okay, for trend followers like me, we would understand that probability-wise, a downtrend has a higher probability to go lower instead of going higher. So that's why we do not follow the news and we follow the trend instead. So the trend, overall trend is down. So that's why we are not really buying into the news. Okay, now, and this was dated back in April 28, 2021. And how about in 2022? Basically, the stock go lower. And right now you can see that this stock is trading at like 4 cents. Okay, even with oil and gas stocks and energy stocks being like in play in Malaysia, not that apparent. But if you look at what's happening in the US, okay, you can actually you would know that in the US right now, energy sector, the oil and gas stocks are really in a super nice uptrend. Okay, so again, even with all these sentiment boosts for the oil and gas sector, this stock is not even going up. Okay, so again, we look at the trend instead of news. Now, another one is good results versus stock price, and this is a very typical example, and this is Top Glove. So you can see that the good QR comes out like after COVID. Okay, even until last year. Okay, even until last year, like mid of last year, beginning of last year, mid of last year. Okay, this Top Glove has a very good QR, very good profits. They are going up in revenue and profits and things like that. But the share price reacts otherwise. Okay, the share price reacts otherwise. And also, a lot of time we can justify stock movement. Okay, stocks movement with fundamentals or with news and kind of like give some explanation to why things are going up and why things are going down. And I'll just say that because we are seeing things in a retrospective manner, so a lot of things we already have what I call is a confirmation bias. Things already happened, that's why we say something. And regardless whether your explanation or your judgment is correct or not, the more important thing, at least to me, is in a market, we want to make money. It is just like when Russia invaded Ukraine, which is now a war is never a good thing. Why the market went up? This nobody can explain. Okay, nobody can explain. And instead of trying to find out the reasons or find news to support things like that, we follow trend. Okay, we follow trend. And in fact, I actually made a YouTube video specifically to talk about the war-based crisis and things like that. How do market reacts to that it's in my YouTube channel. So if you want to watch that, you can watch that after this webinar. But I'm here to share with you that, to me at least, sometimes news is not really that important. I prioritize trend or at least price action first. So there are a few things to consider. Okay, and these are the hard lessons that I learned from the market and also from my mentor. The first thing, news doesn't matter. How people react to the news matter. How many of you agree with this? If you agree with this, can you type 2 in the chat box? Type number 2 in the chat box. Because sometimes, okay, sometimes the news seems great to you, okay? But again, the capital that you have, it is like a vote. If you think that the market is, the news is good, you cast a good vote. If you think that the market is not good, you cast a bad vote. But you never know, those people who have huge capital, you don't know their vote. Okay, you don't know whether they think that this news is good enough or the news is good, but not to their expectation. So again, how people react to the news matter. But the problem here is, there are no ways to know how each and every player in the market think about the news. You can't even know what other retailers think about you. You wouldn't know how the fund managers think. You wouldn't know how the syndicate actually thinks. You wouldn't know how the director thinks. Right? So therefore, everything is just a guess. And yes, it could be an educated guess, but an educated guess is still a guess. Okay. And people who have large capital will still affect the market. And also, people expectation a lot of times has already been factored into the price. Okay. A lot of time has also been factored into the price. And also consider a few things like insiders movement. Okay. Insiders movement. Okay, let me just ask you one thing. Let's say, how many people are in this webinar tonight? Okay, like 200 over. Okay, 283 people in tonight's webinar. First of all, thank you for joining. Okay, now I want to ask you, let's say 280 over people here in this webinar tonight. Let's say we are working with a company called Company ABC, for example. Okay, Company ABC. I don't know your position. You could be one of the accountants, okay, non-financial related, okay. You could be one of the sales manager. You could be one of the just like normal position within the market. Okay, it could be like operations. You could be anything. Okay. Now, let me ask you, when you are working inside a company, let's say in this case, companies ABC, do you have an idea that whether or not, okay, let's say the financial quarter is going to end by the end of this month. Okay, and the report is definitely, the quarterly result is going to be published after a few months. Now, let me ask you, before the results publish, despite you are not in the financial department or doing the accounts, do you think that being an employee, let's say, in companies ABC, you would have an idea whether or not your company, our company, is going to do better or worse during this quarter? Do you have an idea? Do you think when you're working inside the company, you would sort of like get an idea whether or not this quarter we are going to be good or not so good? Okay, yes or no? Type in the chat box below. I already see a lot of yeses in the chat box. Okay, then let me ask you one thing. You know that, okay, it is going to, let's say, it's very normal, okay? When you're in a company, when the business not good, we have a lot of meetings. Correct or not? We have a lot of meetings, okay? The manager asks for meeting lah, this asks for meeting lah. Why this month sales not so good? Why is not full production? Why the client run away? Okay, even if you are not in the account department, you somewhat get an idea whether the direction of company is heading up or down. Okay, now let's say you already know that, okay, this quarter is going to be not too bad. It's going to be not too bad. What's the next logical move that you would do? Can somebody share in the chat box? What's the next logical move that you would do? Okay. Buy some. Are you sure it's some? Okay. Are you sure it's some? Okay. A lot of people, they will buy a lot because this is considered as an insider's information whereby the outside world do not know yet. So first thing what you do, you buy. After you buy, you take out your saving to buy. Then you ask your wife to buy. Then you ask your friends to buy. Then you ask your parents to buy. Then your friends ask their parents to buy, ask their girlfriend to buy, ask their wife to buy. So all these things collectively, they will move the share price. Okay? They will move the share price. Now, there is no news just yet. Then there is no news outside just yet. Okay? Maybe when the share price moves, then some analysts will come out and say, and write a report, oh, the share price moved 10% or 20% in these 2 months because the expectation of the company, the blah, 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 maybe the company will do better in the next QR. Maybe the next QR will be great. You will realize one thing. A lot of times, news comes after the price movement. News comes after the price movement because a lot of investors out there demand what we call a cause and effect explanation. Okay. It's like when other people say, hey, why these companies no news, but the share price up by 20% in a month? Then they'll go and search the news. And that's how news come out. That's how research report come out. A lot of times, and not all the times, but again, you try to recall. Do you ever see this kind of scenario? Okay. A company release good results. Okay, and then when you look at the stock prices, it has already moved for the past 2 to 3 months. It's very normal in the market because insiders are buying. Now, let me ask you one thing. Okay, let me ask you one thing. When the QR is finally released, what would you do? As a person working inside the companies and you already buy your own share, what would you do? Okay, most of you say sell. Let me just give you a tech profit. Okay, let me just give you a very realistic and honest scenario and what people will do. You would sell if you think that your company will only be good for this quarter. Okay, because logically speaking, if you already know that next quarter is going to be better as well, you wouldn't sell. Am I right? If you think that this is logical, can you please type 3 in the chat box? Type 3 in the chat box. Okay, so it's very simple. If you think that, okay, the company or our company only this quarter because a bit lucky so that's why our result is good, then you will sell on news. You sell to people who read the QR. But if you know another piece of information ahead, because you know that for the next quarter is going to be great as well, or it will be greater, you will keep the share. So that's why this explains why sometimes after QR, certain stocks go down in price, and why after QR, certain stocks the price did not actually go down. So again, but the thing is this, because I'm telling you a story, you think from this perspective. Of course, you think that everything is logical. But when we are out there in the market, sometimes it's hard to tell whether or not after this QR, the stock price will go up or down. Because again, you refer to point number 2. There are no ways to know how each and every player in the market thinks about certain situation. And some more, you are fighting with the insiders all the time. Okay? So regardless what's happening, big buyers and sellers always leave footprint in the market. When all the insiders buy, it is impossible that they wouldn't push up the share price. It is impossible that you wouldn't see volume inside the chart. Okay? You wouldn't see volume. It's impossible that you wouldn't see volume inside the chart. So again, all these things, they leave footprints. It's either the share price go up or go up, meaning that price move up and it has volume, or you see volume, but the price did not really move up much. Okay, so those are like accumulation stage. All right, so next, technical analysis assumes that all known fundamentals are already factored into the price. So this is why generally, and this is the at the most generic level, this is what technical analysis people believe in. And the next thing I want to share with you is what is trend. Okay, because I'm specifically talking about trend following and why you should trade with the trend. Because when it comes to technical analysis, there are a lot of like different school of thoughts. Okay, and I'm just in one of the school of thoughts. Okay, it's called trend following. So what is trend and why should you trade with the trend? So let me ask you a few questions first. Okay, did you ever encounter such a situation? The first is you look at a stock, the stock price has been dropping and it looks cheap. You buy the stocks, however, the stocks just become cheaper and cheaper. If you ever encounter this, can you please type 1 in the chat box? Type 1 in the chat box. All right, I see a lot. Okay, probably happened recently during these few months. Okay. Now, the next is you look at the stock. The stock price has been going up and you feel like it's very expensive and you feel like you are late for the party. You end up not buying it. However, the stock price just moves higher and higher and higher, and you always feel like, last week or last month, what's the best time to buy? If you ever face this scenario, type 2 in the chat box. Type 2 in the chat box. So, I believe by asking you these two questions, how many of you already kind of understand how trend works? If you understand how trend works, type trend in the chat box. If you kind of understand, okay? You kind of get a little bit of hints, okay, how trend works already. All right, so follow the trend and follow the smart money. Okay, so the core belief of trend following is this: the trend is more likely to continue rather than reverse. So an uptrend has a higher probability to go up, and a downtrend has a higher probability to go down. All right, and trend traders or trend followers will look into going long in an uptrend or go short in a downtrend. But of course, in Malaysia, we can only do IDSN. So generally, I don't go short in Malaysia, and I generally don't go short in stocks. Okay, because when you go short, you are technically speaking, you are exposed to infinite losing potential. And when you go short, a lot of times when things rebound, your profit can wipe out faster than you think. Okay, so again, when it comes to stocks, I'm a long only trader, meaning that I only go long for stocks. I don't look into short selling. Even in the market right now, I only look into long. Even for like markets whereby I can do short sell, I also go long only. All right, so I'm not a person who anyhow go short when market is bearish. All right, so this is an example of an uptrend. So an uptrend is like a trend whereby on the long-term perspective, this stock go up. So you look at the weekly chart, it is uptrend. Okay, it's like every quarter it will at least break a new high. And this one also, you kind of see the same thing. Okay, let me pull out my pen. Okay, so you can see that last year, okay, March, break new high. April, break new high. May, break new high. June, July, go down a bit. August, September, okay, after a quarter, it break new high. September, break new high. October, break new high. Then rest for 1, 2, 3 months. Then after that, it break new high on February. March, break new high again. So this is example of uptrend. Like every quarter, at least every like quarter, you will see, okay, the stock having some movement. Okay? The best one is, of course, like every month it break new high. That would be the best. Okay, so next is tax cam. So you can see that after a consolidation, you can see that November break new high, December break new high, January not really, but February break new high, March break new high again. All right. So next is equal world. So you can see that recently stocks are also climbing up. All right. And approaching the high here. But this one may be a little bit scary for some people. But nonetheless, the key here is this. You can see that overall, the stock is going up. Okay. Sometimes when you look at the overall trend, try not to complicate things first. You look at the chart, whether or not this is up. Okay. Compared to maybe Sapura just now. All right. So this one is Ncom. You can see that after this push, okay, of course, you don't chase higher. Usually what we do is we wait for the stock to sort of like rest a while. If it continues going up, we can buy because it's a trend continuation pattern. So you can see December break new high, January break new high, February break new high, March break new high. Recently, we have a correction, which is a few days ago. And right now, I think today is rebound already. All right. So again, this one, NESCON, same thing, but I think this one retraced quite a bit already. But this is to show you, okay, trend. A lot of times, like when NESCON like this break new high already, people start like, it's too late. But again, if you trade a breakout, you know to set a stop loss, you can still make a little bit of money out of these trends. All right. So these are the example of uptrend. Now, at the most generic level, you want to see the stock going up like this. Okay. And of course, you also heard about those like higher high, higher low, higher high, higher low. Now, those are like in a wave pattern. Okay. It's like you have your impulsive wave, you have your corrective wave, impulsive wave, corrective wave, impulsive, corrective. All right. So these are the smaller thing when we talk about the market. Okay. So again, for trend followers like us, the very first thing that we want to look at is actually whether or not the stock is in an uptrend. This is the bare minimum. If it is in a downtrend, then we wouldn't want to look at it. Now, the next thing I want to share with you is how do you analyze and follow trending sectors? Now, a lot of things I'll share with you, but understand that right now the market is not really, okay, in the most bullish manner. Okay, it's bearish to a certain extent. But I want to share with you so that when the market recovers later, okay, like, I don't know, maybe next month, maybe next quarter, or maybe next year, when the market recovers in the most bullish form, you know what to do. Is that okay? Can I share with you? Okay, meaning that some of the thing that I share might not be applicable right now in the market, but maybe in the future, when the market becomes like normal already, trending up already, there are a lot of information that you can use. Is that okay? If it's okay, type okay. I just want you guys to understand that a lot of sometimes, okay, especially like the market right now, not every time you learn something you can apply directly. Okay, not that is like you can apply directly. Okay, when the market is great, definitely you will see the applications. All right, here are the things that I want you guys to remember. The first thing is I always check the major indexes. I always check the major indexes like the Dow, the S&P 500, and the NASDAQ. Now, specifically when NASDAQ is trading at all-time high, there is one sector that in Malaysia you need to look at. What is that sector? Can anyone tell me what is that sector? Very good. Technology. So do you remember that like ever since like year 2020 until like early 2022, NASDAQ is trading at all-time high and our tech stocks are basically in a super bull run. Okay, if you remember, type 1. If you remember, type 1. Okay? Yep. Okay, so a lot of people remember. Okay, now S&P 500 sort of like represent the overall market. And I realized that S&P 500 always correlates with a lot of our mid-cap stocks and a lot of like small-cap stocks. Okay, mid-cap to small-cap stocks. Okay, now DJI refers to some of the more conventional sectors. Now, when I say conventional sectors, I'm referring to like banking sectors, okay, and oil and gas sector. Okay, now these are just a little bit of relationship only, but the most apparent one is actually NASDAQ. NASDAQ is very correlated to our technology sector. So when you see Nasdaq is trading at all-time high, for example, you need to look at our sector indices. Okay. So in Malaysia, we have sector indexes. Like for example, technology, we have a technology indexes. Okay. And you can basically search this in whatever charting software that you're using. So technology sector, for example, right now you can see that tech is in a downtrend. Okay, there are a lot of indexes in Malaysia. Okay, you can see construction, you can see consumer products, you can see like energy sector, you can see let's say you can see financial services. Okay, you can see financial services is actually trending a little bit upward. So that's why your Maybank, your public bank seems like looking okay compared to technology. Because technology, it seems like it's like free falling. Okay, it's like free falling. All right, and you have like healthcare going down. That's why your Top Glove, your Harta Lega, all those are not really in our favor. And you have property, plantation recently being speculated. So that's why it's going up. And again, one thing I want to share when it comes to plantation. Some people tell me, like to say things like this: plantation stocks go up because palm oil price go up. I wouldn't agree with this. Do you know why? Okay, can somebody tell me why I wouldn't agree with this? Okay, let me just grab another chart right over here. Okay, nobody. Okay, but it's okay. You see, plantation stocks in year 2020, it has been going up a little bit because, early 2020, everything basically goes down. And in 2021, it's actually going down. And only during recent 1 month, it is being pushed up. And I don't think this is, I don't simply connect the dots when it comes to investment or when it comes to trading. Because if you look at FCPO, you guys can see the FCPO chart right now, right? Just make sure things are sharing screen shared properly. Can you see FCPO chart? If yes, type yes. Somebody type yes. Okay, great. FCPO actually has been going up since like May, June, July of 2020. It has been going uptrend like mad. Okay. But our plantation stocks is only going up recently. Okay. So yes, of course you can find like other reasons and things like that. But even without the news, if I see something is going up, I can trade. That's the thing. I don't need to go and find news or because soybean oil supply is not good or whatever things is being okay. So I know news sometimes works, but the thing is, looking at trend itself, I can just get in. Okay, and in fact, I have been riding the trend of FCPO since 2 years ago. Okay, so there are a lot of things, of course, we can bring in the picture, but again, if you are not a fan of, like me, I'm lazy to read news, okay, because sometimes we have a lot of bias. Okay, we have a lot of bias, so that's why, to me, I follow the smart money in the market. Yeah, I follow the smart money in the market because they leave footprints. Like for example, you can also see small cap is going down recently, and what else? FBM ACE. Okay, now when you see FBM ACE is going up like previously, okay, during this period of time, it means that a lot of speculative penny stocks are being speculated. If you see FBM like small cap or the FBM 70, okay, if these are going up, it means that some of the mid to small cap, they are doing quite well. Okay, so again, you can look at sector indexes, you can look at silent indexes to sort of grasp an idea what are the stocks that are going up. But right now, I would say that if you look at sector indexes alone, you couldn't get too much idea. Okay, you couldn't get too much idea. Okay, so for example, one of the, I would say indexes in a very nice uptrend is actually industrial product. And under industrial product, there are actually a lot more to talk about. Okay, but again, this is the first clue that we can get. Okay, because in the market right now, okay, industrial product index is going up. Okay, now the next thing is we need to find stocks that move in groups. Okay, stocks that move in groups. So what are the stocks that actually move in groups right now? So we have to find out. So every time stocks will move, like for example, year 2020, we know that glove moved in groups. Okay, and we also see that technology stocks move in group. Okay, and then in 2021, we start seeing like some of the metal stocks move in groups. Okay, and also certain tech move in groups as well. Okay, so just to give you some example, now this is PChem. Can you tell me this is uptrend or downtrend? Up or down? Up. Very good. Okay, it is in an uptrend. Next, Ncom, uptrend as well. Nilex, uptrend as well. Okay. Bikawan, not a very popular stocks per se, but it is uptrend as well. So let me ask you, these stocks, what kind of businesses they are related to? What kind of businesses they are related to? But Bikawan maybe not. Okay, let's say Nilex, Ncom, and PChem. Nilex, Ncom, and PChem. Okay. Chemicals. Okay. Chemicals. So you can kind of see that, okay? You can kind of see that they are related to chemical. By the way, Bikawan is also chemical related. Okay, just that different kind of chemical. Okay, Batu Kawan, because I seldom study companies, okay? So yes, they are related. They can be related to plantation as well. Okay, they are chemical manufacturing company. Okay, I don't care what chemical is, but it seems like all these stocks, okay, they move in groups and you can profit from it. Okay, in fact, Mcom has been one of the most profitable stocks in my portfolio. Okay, so all these, they are sort of like chemical team. Okay, chemical team. So next, let's look at Ecower, Matrix, SP Setia, Tambun. What are these companies? Somewhat related to. Okay, construction or property, somewhere around those lines. But of course, not all property or not all properties or construction related stocks will go up, but you can sort of see that they usually, okay, they will have like seasons whereby certain stock will move first and then some will move later. Like previously, we have stocks like Ajia moving up. Okay, those are also construction, property related things along these lines. So stocks, they move in groups. Okay, like right now in the market, sometimes the leader, sometimes the laggard, but you need to look at stocks that move together in groups and try to identify the trend from there. Okay, try to identify the trend from there. And of course, right now in Malaysia market right now, in the Bursa market right now, there are actually small teams, I would say teams, like certain group of stocks is being pushed up. There are also some kind of individual stocks that are being pushed up. Okay, not everyone will move up altogether. Okay, so one of the tips that I can give you is this: every day you log into your broker account, there's one thing that you can see. Okay, there's one thing that you can see is actually top gainers. Okay, top gainers. So when you see certain stocks come out in the top gainers, like 3 times a week, okay, 2 times a week, appearing in the top gainer, then you need to start looking at these counters. Okay, start looking at these counters. And of course, from there, you get some idea. Like for example, if you start seeing that like NCOM, PCAM, NILEX, and all these things, okay, if you start seeing those stocks come out in the top gainer, you need to slowly, okay, there are a lot of tools that you can use like KLSC Screener or even like Malaysian Stock.biz. All these platforms, okay, you can actually look at you can go to the categories and find similar stocks within that sector or that indexes. And sometimes certain stocks, they are within the fine line between two sectors, okay, within two sectors. And it's like, some people say certain company is plantation. Some people say certain company is chemical. Both can be correct. But if you really want to know the official classification, you have to go and deep dive into the subsectors that they are really in it. Okay. So yes, but normally they already fly. That's the thing. Remember just now that question that I asked you. Yes, they already fly. But what happened next is they could go up higher. They could go up higher. And it's like you always feel that you are late. So here's the thing. With technical analysis, okay, what we intend to do is, yes, those stocks are already going up, but we want to look at certain entry points that are logical for us to position in from a risk standpoint. Okay, from a risk standpoint. All right. So without further explanation, let me move into this. How can you structure your trading plan with our 4-step T.E.S.T process? Because yes, the stock has already fly. Of course, because I only look into uptrending stocks. And when the market is trending, of course, right now, a lot of stocks, they don't trend very nicely. But when the market is trending, when some stocks are trending, they can really move a lot higher than what you think. Just be honest. When Top Glove just went up, how many people actually expect that it will go to like 29 ringgit, 30 ringgit? We never know. Maybe the maximum we expect is like, oh, it breaks 10 ringgit, 13, then break all-time high, then like 15 ringgit. No one knows how high a stock will go. Okay, so as a trend follower, we just follow the trend. Okay, it's like no one ever expect FCPO will go to 7,000 again. So that's why we just follow the trend. So to follow the trend, we use this 4-step T.E.S.T process. And these are the 4-step process. First, we look at the trend. Okay, we want to find stocks that are in an uptrend. Okay, stocks that are in an uptrend. Ideally, you look at a 1-year chart and it is trading at 52 weeks high. That would be the best that I would go for. And that would be the best that I will go for. Now, the second is entry. So how do you plot entry? The first is, of course, you can buy based on rebound. Then another one you can buy is based on breakout. Now, some people will also like to collect at a support. This one is up to you. Okay. But the key here is you need to have some kind of entries to position into an uptrend stocks. Okay, position into uptrend. Now, next, we want to have a stop loss. Okay, the stop loss, to my practice, I want to make sure that it does not exceed 10%. It does not exceed 10% ideally. And the next is take profit or trailing stop. Now, with this, I need to explain a little bit. So, either when the stock go up, let's say you buy here, this is your entry, and this is your stop loss. When the stock go up, you can have a target profit. Okay, let's say you buy a stock at 3 ringgit, your stop loss is 280, and you take your profit at maybe 330. So your risk to reward ratio is 1 to 1.5. But there's one way called trailing stop, and trailing stop is actually one of the most useful strategy for trend followers. So sometimes we know that when the stock go up, okay, we buy, and our stop loss is here. So when the stock go up, okay, we move our stop loss upward, become a trailing stop. And then we move our stop loss upward, we move our stop loss upward, we move our stop loss upward until the day our stop loss, our trailing stop got hit. Okay, so I will show you a little bit of example. I'll show you a little bit of example. Okay. So this is pressed metal. Okay, pressed metal. So again, first thing, the entire trend is up. Okay, the entire trend is up. Next, at this turnaround point, we want to find a moment whereby it is telling us that this is probably going to continue the uptrend. So you can see that first thing, here is a support. And here it starts forming higher high. Okay, it starts forming higher high. So here is a rebound. Here is also a rebound. And here is a breakout. So you can buy after the breakout or you buy on these rebounds. So there are many ways of doing it. So let me just show you how can you plot based on rebound. So again, this is actually a rebound. Okay, if you want to use your like whatever EMAs, you can also do that. Let's say if it rebound from a very good EMA or MA, then you buy that rebound. You can also do that. So let's say you buy the stock at six ringgit here. Okay, and then now the way we set stop loss, is this: we buy the stock here, and we reference this swing low, and we set below the swing low. So for example, this is $6 at 6 ringgit. We set our stop loss at somewhere 575. Okay, 575, and then we buy when it's rebound. Okay, so the stock go up, come down, and then go up again, come down and turn up. So what we do basically, our initial stop loss is here. So when it turn up, come down and go up, we move our stop loss from initial 5 ringgit 75 to somewhere around 650. We move to the latest swing low, below the latest swing low. Okay, below the latest swing low. So how many of you are following me? If you're following me, type F. Okay, F stands for follow. Okay, if you're following me, type follow. Okay, so this is generally how trailing stop works. But of course, up there, if you want to take a little bit of profit, you take lah. Okay, maybe you buy like 2 lots. You want to sell 1 lot first, another lot you trail. It's up to you. Okay, but again, trailing stop is how we use the strategy. Okay, this is how we use the strategy. So, for example, previously, if you buy the stock here because there's a higher low, okay, higher low, and then there's a rebound from a higher low, you anticipate a mini breakout here. So you buy right over here, put your stop loss here. Okay, put your stop loss here. And then you can move your stop loss up to this level. And when it goes up, come down, somewhere around here, you will hit your trailing stop. Now, sometimes, okay, you earn mini profit, but sometimes when the market is super trending, you will make a lot of money. You can go and back test yourself with the super trending stocks in Malaysia. No joke. When something really trends, you can easily make 3 figures, 3 digit. But right now, of course, I cannot tell you anything because I don't have a crystal ball as well. What we do is we follow trends of uptrending stocks. Okay, we follow trends of uptrending stocks. We never know if T-Metal will retrace back to below 7 or it will go up to 8 ringgit or 9 ringgit or 10 ringgit. The thing is, if it is uptrend, we follow. Now, uptrending stocks. Now, if this is the first time you learn or know about trend following, I know how you feel. Jin Hao, tonight, whatever chart you share with me, everything already go up. That's the thing. When we are looking into trend following strategy, everything looks expensive to people who never learn about trend following. And this is normal because I come from there as well. Okay, but what you can do is this. In the market right now, you can list down 20 stocks of different sector that are trading at 52 weeks high. You can use whatever apps, okay, like Galaxy Screener. Go and screen out certain stocks that are at a 52 weeks high. You list down 20 stocks, you revisit that list 1 month later and see how many of them break new high and how many of them actually becomes a downtrending stocks, or how many of them they are still within like plus minus 10 to 20% range. Okay, this is an exercise that you can do. Okay, this is an exercise that you can do. All right. So next, this is NESCON. Basically, you can trade a breakout. Okay, trade a breakout. The first is, of course, stop loss is below here. And after that, you move your stop loss upward. Okay, of course, now the price dropped below already. So kind of like mini profit for NESCON. But if you buy before that, somewhere around here during this turnaround, then of course you can get higher profit. Okay, now this one is another great example. Some people would say, okay, if you look at a chart like this, NCOM probably caught your attention. Okay, NCOM probably caught your attention somewhere around here. Those who never know about trend following, they'll say, wow, already fly, cannot already, cannot already. Okay, it's super high already. But this is the time whereby I will start looking at the stocks. If I miss this, it's fine. Because probability-wise, it could go higher. Now, what I will do for NCOM is this. Understand that this is a resistance. Here, you can see that it's a higher low, and this one may be a higher low. If I'm not mistaken, this is also an EMS support right over there. So what I will do is, okay, this is not what I will do. Basically, this is in my portfolio. Okay, you see a higher high, and it seems like a resistance. Instead of waiting for it to break out, I will enter at this rebound. I enter half position. I'll calculate my position size first, and then I will enter half position. When the breakout is successful, then I enter another half. This is how we control the position as well. Okay, one of the little tips here. So sometimes when stocks shoot up like this, you need to let it rest for a while. Okay, you need to let it rest for a while. Now, let's say if you accidentally buy during this rebound, you buy here, you set a stop loss here, but your stop loss is never hit. Your stop loss is never hit theoretically. Okay, unless this one, you put maybe too tight right over here, then maybe you got hit. But when it goes up again, when you see a higher low, you can reposition in. All right. So again, these are basically how, okay, we look at stocks. Okay, this is basically how we look at stocks trading in general. So we look at uptrending stocks, and then we try to find entry. So the entry could be based on a lot of things, because some of you might use rebound, some of you might use breakout, some of you might use EMAs, whatever you are comfortable with. The exercise that I want you guys to do is, if this is the first time you heard about trend following, list down stocks that are in an uptrend, maybe 20 of them. If you trade markets outside Malaysia, you can do this as well. Any markets. Okay, any markets. And then you revisit it every 1 to 2 weeks, or you revisit the list next month. Okay. You can, this is the first exercise that you can do. All right. So I just want to comment a little bit about Malaysia market currently. So Malaysia market currently, okay, let me just share with you, when would trend following work the best? Okay, trend following work the best when you have a super uptrend stocks. Okay, like so. Then you will have a large potential. Okay, now, and of course, my biggest winner during 2020 is UWC. So you look at this trend. Okay, you look at this trend. This is how you can write the entire trend until right over here. Okay, until right over here. So, and then after that, the stock, you follow whatever your analysis is. But after that is sideways, then downtrend. So during this uptrend, it's not that, okay, it's not that from the bottom to the high, the stock go up by like what, 1,300%. I'm not asking you, and I'm not telling you that you can capture 1,000% in a trend. But what I want to share with you is, if an uptrend can go up 1,000%, is it tough, or is it logical for us to grab maybe a 50% from this stock? Again, you can see here, probably a lot of, if you always see things like this, okay, from the bottom, the stock already go up like 500%, then you give up looking at the stock. But after a correction, the stock go up again. So let's say you buy somewhere here. Okay, you buy somewhere here, you set a stop loss down here. And here would be, let's say, during this bungee jump, you sell. You very unlucky, like you sell right over here. Okay. We are still talking about 40% profit in like what? November to March, in 6 months. Okay. So that's the thing that I want to share. But one thing is, if you want this kind of strong trend, I would say that the market needs to be very strong. That's the first thing. And second thing is, ideally, there is a team like glove, like tech. Okay, then it will be easier for you to get into stocks like this. Right? It'll be easier for you to get into stocks like this. But follow the rule, you would get into such stocks. Okay, like recently, we have like Encom, you have P Metal, you have like MSC, okay, and there are a lot more. Okay, there are a lot more. So focus on stocks that are in an uptrend. Okay, then you can sort of like ride with the trend, ride with the tide. You are not swimming against the tide. So for example, stock, you can look at stocks like currently uptrend. And again, not buy or sell call, okay, just to share with you, okay, stocks like Chin Hin, okay, stocks like Chin Hin is going up. Stocks like, as long as you see there's still higher high, higher lows and things like that, okay, then you can still watch. Okay, stocks like what I tell you just now, MSC. Okay, it shoot up, come down, go up again. Okay, so again, you can see, if you were to get into this stock, can you put a 10% stop loss? 10% stop loss, is it below the previous swing low? Okay, then you can sort of like plot your entries. It's not guaranteed that it will go up, but this is generally what we practice. Okay, so again, some people ask, this stock, is this okay? Okay, then you say, then you have to look at the stock. Can I comfortably set a 10% stop loss from where I'm at? So again, DNEX, I would say, is a little bit volatile, because if I set 10% stop loss, it seems like it will get hit very easily. But again, do you want to take the leap? Okay, the thing is, this stock, trend-wise is up, but do you think that this type of uptrend is a bit less predictable? And I leave this question to you. Compared to maybe like Chin Hin, compared to P Metal, okay, compared to P Metal, for example, would you think that the trend for P Metal is slightly more predictable compared to DNEX? It seems like DNEX, the smart money or the market maker or the syndicates, it seems like when they want to sell, they can really go really aggressive. This is what I look at. And right now, volatility is high. Okay, you have a big downward movement, you have a big upward movement. Okay, if the stock now today drop 10%, tomorrow up 10%. Okay, yes, at the end of the day, the stock could still go up, but to me, it's too much drama in the middle. Okay, to me, it's too much drama in the middle. So sometimes I rather watch drama than be in the drama. Although at the end of the day, I can make some money. Okay, this is just my 2 cents. All right, so you can see that these are examples of stocks that are in an uptrend. Okay, again, not buy or sell call. I'm just sharing with you. There are a lot of uptrend stocks in the market right now. Okay, so yep. Okay, so again, depending on what kind of trend you can capture. Okay, what kind of trend you can capture. All right, and also like a lot of banking stocks, I know that they are moving in groups as well. So how about diversify into a few sectors? You can have a little bit of plantation, you can have a little bit of energy, you can have a little bit of banks, you can have a little bit of like chemical, or you can have one metal stocks. Okay, so diversify across a few sectors is definitely great. Unless there is a situation whereby it is very obvious that one or two sector is dominating the entire sentiment. Like for example, in 2020, it's very obvious that glove took the leap, and then after that, technology also follows suit. Then only you diversify into only these two sectors. Or else, like the current market right now, I would say that, okay, if your capacity is to buy 5 stocks, you can buy like one plantation, one energy, one banking, and mixture of different things. All right, mixture of different things along those lines. Okay, you get what I'm trying to say. All right. Oil counter, very volatile. Just to share with you, in Malaysia, I usually don't prefer energy counter. Okay, it's notorious for heavy speculation. But again, if you can find a good entry with an ideal stop loss, meaning that good entry as in any kind of entry that you don't have to chase the high, it just rebound from a support nicely. And if you can put a stop loss below the swing low and it is less than 10%, then I would say that is a good to go. All right. So again, just to recap the 4-step process. Okay, just to recap the 4-step process. The first is, personally, as a trend follower, I only look at uptrend stocks. And how people define uptrend stock can be different, but to me, I want the stock ideally to be at all-time high. If not all-time high, then 52 weeks high. Ideally. Next is entry. How do you plot entry? I believe a lot of you may have your own ways of entering, but again, this is just you implementing, integrate, okay, your style into this 4-step process, your entry style in the 4-step process. Next is to set a stop loss. Okay, set a stop loss, and then I would say the biggest takeaway would be having a trailing stop. So meaning that when it's in profit, maybe, okay, you sell half and another half, you trail it all the way up by moving up your stop loss. All right, so that would be my sharing for tonight's sessions. And I guess Shen will take over and we can have an Q&A session.
Okay, thank you so much, Jinhao, for sharing with us how can we use trend following strategy. All right, so if any question for Jinhao, you may write it in the Q&A section, so we'll be able to address the question. Okay, if any question, can write in the Q&A. Jinhao, maybe you can share about Maybank. There's one participant asked about Maybank. Could you please show how to trail Maybank?
Sure, no problem. All right, so Maybank. Okay. Just another example on how can you trail. Okay, so Maybank. Okay, how can you trail Maybank? So right now, depending on what price you buy, okay, the swing low is here, okay, and then the swing low is here. So if Maybank were to go up tomorrow, okay, let's say when it passed through this corrective wave, half of the corrective wave, then you can identify this as a swing low. So let's say you identify this as a swing low already. This is like what? 8 ringgit 75 cents. Okay, so what you can do is you put below the swing low. You leave like a little bit of space for it to squeeze. Like for example, for 8 ringgit stocks, you can put maybe like 20 cents, not 20%, 20 cents below like 8.75, just to give the stock to have a little bit space to squeeze. All right. So again, I don't know what price you buy. If let's say, assuming you buy somewhere around here when it rebounds. So initial stop loss could be here, and then you move your stop loss upward, and then later perhaps you move your stop loss higher. All right. So this is how we move our trailing stops. All right. Okay.
Okay. Amiru would like to ask, how do you determine the smart money using the technical indicator?
Okay, now some software might have smart money index, I think, like that. But to me, I only see a few things. The first thing is I will pull out my my volume, okay, and a volume average. When you see the bars, okay, when you see the volume starts always going up above the average, then you can start following. Okay, like for example, you can see a volume spike. Okay, if you put something like this, okay, Maybank, okay, you can see that a lot of time they are above the what I call above the average, because Maybank itself is a high volume stocks. Okay, it's a high volume stocks. Now, on certain stocks that have like usually lower volume, but some like suddenly the volume goes up, you can see very apparently where the smart money starts coming in. Okay, where the smart money starts coming in. So from here, you can actually see, and also like for stocks like Ncom, okay, you can see where the smart money starts coming in. Somewhere around here, and then somewhere around here. All right. So, and also pay attention to stocks moving up with volume going above the average, and they're moving in a sector. All right. So these are the manual way, but of course, I know that there are people out there who use like customized software to calculate, but personally, I don't really use that. I only want to see price action and trend. That's it. More than enough already. All right.
Okay, thanks, Jinghao, for answering this question. David would like to ask, can you share your strategy on how you do average up if the stock keep trending up?
Okay, sure. But I have to, instead of sharing in, I'll use whiteboard, easier. Okay. Okay, for example, you guys can see my whiteboard, right?
Yes.
Okay. So for example, a stock is going up. Let's say you buy at $2 and your stop loss is 180. Okay, and the stock go up. Okay, let's say you buy 10,000 shares here. Okay, 10,000 shares here. So usually what the first thing that, okay, this one is a little bit like risk management already, a little bit advanced, I would say, but it's okay since you asked it. Okay, the risk here, okay, the risk here is 20 cents. And this 20 cents is what we call 1R, 1 unit of risk. So I would not even think about adding positions before I have more than 1.5 R of unrealized gain. Okay, so meaning that I will only think about buying if it is like 2.3. Okay, now, of course, it doesn't mean that when it moves to 2.3, I must buy. So I'll wait until, okay, maybe the stock retrace and go up again. Maybe I will buy at 225. Okay, or maybe even higher. Let's say 225. I decided not to buy here. I buy on the next wave. Okay, give you an example. Let's say for easier math. Okay, for easier math, 3 ringgit. Now, the general rule is this. The general rule is we want to follow pyramid rule. Okay, pyramid rule. So if I buy like 10 lots here, I will want to buy less, maybe 7 lot, maybe 6 lot, maybe 5 lot, then maybe 3 lots, maybe 2 lots. So I buy less. Okay, I buy less. Now, so for example, if you remember this rule, it means that my first position is 10,000 units. Then when I buy at $3, for example, I buy like less than 10,000. Okay, pyramiding, you are correct. And to double check everything, what you can do is actually calculate your new cost. How do you calculate your new cost? Okay, for example, you plan to buy 8,000 units here. Okay, you plan to buy 8,000 units here at $3. Okay, so you want to calculate your new cost price. You need to calculate your new cost price. So pull out your calculator. You have 10,000 units at $2, so it is 20K here. Okay, $2, 10,000 unit. not 20K. Is it 20K? Wait. Okay. 2 times 10,000 unit. So it's 20,000. Okay. And then at $3, at 3 ringgit, I want to buy 8,000 units. So 3 times 8,000. So I will be using 24,000. Okay. I will be using 24,000. And the total units, 10,000 plus 8,000 will be 18,000 units. So I will need to use 20,000, which is the cost price of first position. Second position, 24,000. Total up 44,000 is my cost. Divide by 18. Divide by 1,800 shares. Then my new cost price is 2 ringgit 44 cents. So the next thing that you need to make sure is this. Okay, is your new trailing stop must be higher than your cost price. Okay, your new cost is 244 or 245. So if your new trailing stop is 270, then you're good to go. Meaning that if it were to hit your new trailing stop at 270, you can still make, okay, around 25 cents per share times 18 lots. So you still have 4,005 of profit. All right. So I believe I answered your question. How I average up. Okay. So mathematics wise, your position size must make sense. And also you don't average up or you don't top up for the sake of topping up. You also want to make sure that there is a proper setup. For example, let's say you buy Ncom. You buy Ncom here. Okay. And then when it goes up, you want to top up. You don't top up like, oh, the stock shoot up, you top up. No, don't. Okay. You want to top up when, okay, like for example, there is a turnaround point. Then you top up. You top up here, for example. You must have proper setup as well. Okay. So technically, it must make sense. And also on the position sizing part, you also have to take care. All right.
All right. So, Jintao, do you think a steeper uptrend stock is a better choice than a stock with a small uptrend?
Okay. I don't know your steeper uptrend is like what now. Okay. But I would say when the uptrend, the recent movement is too steep, I would stay away. Okay. Because we know that it is not that healthy. Okay. We want to wait for a retracement first. Okay. We want to wait for a retracement first. And small uptrend sometimes is not a bad thing. Okay. If it is slow and steady, every month go up 10%, I also don't mind. I rather my stocks to move slow but consistent rather than the stock is being speculated for these 2 weeks. Then it's like the stock go up 30% these 2 weeks, then the next week retrace by 25%. I rather don't want this type. Okay, so I would say when I buy stocks, I try to buy somewhere near 20 days average. Okay, if it is too far away from 20 days average, it means that for the past 20 days average, meaning that for the past month's movement versus where the stock price is right now, there's a huge disparity. It means that this stock is probably a little bit overly extended. Right? Not necessarily have to touch your 20 days average, but the nearer you can, the better. All right. Okay.
Okay. Thanks for sharing the tips. So the next question is, so when we do this trend following strategy, so at which point should we take profit? And is there any strategy that we can use to maximize the profit?
We basically take profit when our trailing stop is hit. We can never expect to take profit at the highest point of the trend. It is just, this type of expectation is not logical because it's not logical, just like we want to expect to buy at the most bottom. Okay, so I can give you a few tips. If the stock is trending up slowly or at a very consistent pace, you can just use your whatever trailing stops, like by referencing previous swing low, or you can use your 20 days average and things like that to do your trailing stop. But in the event that if certain stock is overly extended, like last time Genetech, okay, you can sell on strength. Okay, you can sell a little bit on strength, sell slowly instead of like sell one go, sell slowly. Okay, I don't want to also speculate like when is the highest. Okay, so if you think that it's unusually strong, it's like the stock is moving up in the 12 o'clock direction, you can sell on strength. All right, so it is like case to case basis. Okay, so I would say that if you already, it is quite obvious that it is unusually strong, then you sell a little bit on strength, but I wouldn't sell all as well because again, it can go a lot higher. So that's why I usually, I would say, okay, let's look at Genetech. Okay, let's say if you're in this stock, okay, sometimes, okay, it can also go very high. So instead of like selling at nowhere, I will also like, if you think that it's strong already, like for example, somewhere around here to here, if you think that it is too strong enough, too strong, like it got like 200% in short period of time, you can sell a little bit. You can sell a little bit if you are scared. But understand that the trend can still go up. But of course, we are seeing things at a retrospective manner right now. Of course, we know how many 1000% this stock go up. But when we are in the stock live, just understand that sometimes you don't underestimate how high a stock can go in an uptrend, and also never underestimate how low a stock can go in a downtrend. Right? So again, if you were to ask me as a trend follower, usually I will stick to my trailing stop, meaning that there is a structure break, it breaks previous low, or it breaks like the 1 month low, then I sell. All right? Okay.
Okay. Marina would like to ask, is it okay to look for oversold stocks such as RSI 28%?
Okay. Typically, I don't buy when stocks is oversold. Okay. I don't buy when stock is oversold. I buy when stocks is overbought. Is it contrary to what most people believe in? Okay. I buy when stock is overbought. Okay. Now, if you don't understand what I'm talking about, I will explain to you with examples. Let's look at RSI. But also, you go and find out how RSI is calculated, because it's a little bit mathematics. When you go and find out how RSI is being calculated, then you understand why buying at an oversold is actually not a good idea. Now, I'll just show you this. Okay, let's say if you buy when it's oversold. You buy when it's oversold. Let's say oversold. You will realize that you don't make money. Okay, you will realize that you don't make money. Oversold. How you make money? It took like 1 to 2 months to break even. Then if you didn't sell and it's break even, it goes down lower. And it's still oversold right now. Now, if you reverse this strategy, okay, you buy when it's overbought. You buy when it's overbought, you make hell lots of money. All right. I will give you more example. Okay, let's look at Ajia. Again, when it is overbought, you buy. You make money. When it is oversold, okay, let's find another one. Chin Hin. Wait. Let's look at Encom, for example. Okay. When it is overbought, you buy. When it's overbought, you buy. When it's overbought, you buy. You realize that you make money. Now, let's look at stocks that are oversold. When it is oversold, I don't know, like 28%, how low is 28%? But you see, if you follow, you basically don't make money. Okay. Let's look at Hatta. Don't everyday top glove. Okay. Here, maybe you make one-time money. But here, no. Here, not really. Here, it goes lower. Here, it go up a while, then goes lower. Okay, so the first thing, stock must be uptrend. Second thing, actually one of my strategy, when the stock is uptrend, when RSI break upward, I start buying one. Okay, this is actually one of my technical entry strategies. You guys untong lah because somebody asked it, so you now know. Okay, and you can go and do some back testing. If your stock is uptrend and let's say it rebound from certain moving average that you always use, and you realize that when RSI move upward, you treat it as a little indication to buy together with maybe MACD Golden Cross. You realize that it's actually a strong, a very solid entry pattern. Okay, so to answer your questions, I typically don't buy when RSI is weak. I buy when RSI is strong, when it's above, at least above 50%. Typically lah. Okay.
Just now I noticed that the RSI setting that you put is 40 and 60. So Ahmad Adam has a question. How do you determine the exact oversold and overbought region
you can use
through RSI?
60-40 or 70-30 also can. Okay. I would say above 50 is bullish, below 50 is bearish. In general, it is like our MACD center line, something like that.
Harry would like to ask, based on what time frame that you are using when you are referring to the RSI?
Daily.
Daily candle.
I only use weekly candle to find major support and resistance, and also use weekly candle to find big trends. Because like sometimes when the stock is going up, then we want to see the weekly chart, see whether or not, okay, it is in an uptrend or not. Okay, is there any other major like resistance in the past few years, things like that.
Okay. We know that technology stock staged a strong rebound today. Like January, the sector is up about 8% today. So the question next is, how can we make money by trading the downtrend stocks like technology stocks right now?
Okay, typically for a trend follower, we trade with the trend. Okay, when there is no trend, we basically don't trade that. So I know that, okay, I know that there are a lot of people who catch the bottom, but this is generally not what trend followers will do, at least to me, because I will want to hold the stocks for slightly longer. I don't do a lot of speculative trade. So I rather buy the stocks that I buy P Metal last month or the months before last, and then I hold 2 to 3 months or even longer until the stock becomes a downtrend. So this is my approach. It is somewhere in between like investment plus trading. It is not like those speculative move. So to answer your questions, to make money from technology stocks, of course, you can buy the dip, something like that, and then probably look at the index futures. Okay, NASDAQ, if it's green like today, then you can catch. If NASDAQ tonight close green, tomorrow you can reap some profit from technology stocks. But these type are actually speculative. Not to say that it cannot, like what I say, there are a lot of ways to make money in the market. And when it comes to technical analysis, there are a lot of school of thoughts. I should say that as for trend followings right now, okay, that kind of strategy does not fall into our realm. Okay, that's the thing. All right.
Okay, I think we're almost time, so let's wrap up the session. So thank you so much, Jithao, for sharing with us the trend following strategy in this webinar. So thank you so much, everybody, for tuning in.
All right. So I think there's one person asking, can I add on something?
Sure, go ahead.
Okay. So somebody asked, somebody said, sometimes when you chase the breakout stocks, it dropped down. Okay. And then you stuck at penthouse. Okay. This is exactly why we need a stop loss, because not every entry is going to turn out to be good. I think this is worth mentioning why in a 4-step process, we need to have a stop loss. And even in any kind of investments, we need to have our stop loss, being you're trading stocks, futures, options, whatever thing. Am I right? Okay, so I believe that we are in the investment thing, trading things. We know that everything associates with a risk. So knowing when to exit when things are not in our favor is one of the things that we need to accept. All right, so that's why stop loss is in a 4-step process. All right, so back to you, Shane.
Thank you so much. So today, new knowledge we learned trading strategy when it comes to RSI, overbought, oversold region. So this is trend following strategies and how we can follow trend and make big bucks in the market. And over time, trend following can give us triple digit gain as what Jin Hao suggested. All right, so let me share my screen to tell you more about our next webinar. Okay, so our next, before I talk about next webinar, this is Bursa Academy. So if you haven't learned about Bursa Academy, you can go to Bursa Academy and check it out. It's a one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. It's simplified, user-friendly, accessible anywhere, anytime. Just head over to www.bursaacademy.bursamarketplace.com. Next week, Bursa Academy is going to launch the equity trading simulator. You can also go there to check out how you can use equity trading simulator to do virtual trading. All right. So for our next webinar is happening on this Friday. That is titled "How Dividend-Paying Stocks Can Diversify Your Portfolio." Now today we talk about trend trading, which is more technical analysis based. So on Friday we're going to talk about fundamental based strategy, which is dividend strategy. All right. So it's happening on this Friday, 11 March, 8:30 to 10 o'clock. You can go to this link to register yourself. So I've given you the link in the chat group. Yeah. All right. So here's the link again. You can, go and check it out. So thank you so much, Jin Hao, for sharing with us your strategy in doing trend following. So I hope all of us here have gained enormous value from today's session. So see you all on Fridays. Okay. Bye,
all right,
everybody.
thanks. Bye, everyone.